Hey, San Antonio, Raul Jimenez here with the Schrader Group. We are here with Schervy Ortiz, our local expert in the lending field. We always get asked the question, what can buyers do to get the competitive advantage? And us as a fiduciary to our clients, we always want to try to sharpen the saw, make sure we have the best competitive advantage in the field. That way we get more houses under contract, we're able to get better deals, and try to find a way to get the best edge when we're out there shopping. So we've been getting it. I'm sure y'all are asking at home. Interest rates are rising. You've seen interest rates rising. We've seen some programs that have hit the market. One of the ones you were speaking about was the lock in your rate before we go out and shop and buy, which lets us know what our buying power is, but also lets us have the confidence of knowing it won't go any higher. Will you explain a little bit about that program we were talking about?
Raul, we like to see things at Thrive Mortgage, myself and the team, to be more proactive. If we see it coming, we'll like to really sell the ship, so to speak, into a position that's going to be beneficial for everybody to make it home safe, so to speak. And so we brought together an opportunity for home buyers actually to be proactive in that approach as they get ready to budget and get ready to know what their monthly payments are, what expenses are going to be, but still want to be able to buy a home. As we know, rent is also increasing, right? So as we're taking a look at between both, should I rent or should I buy? The easy answer, of course, is buy. How do we help clients? So we came up with the opportunity to actually lock in the interest rate 6 months in advance.
6 months in advance?
No address needed. This gives the peace of mind, the comfort zone that no matter how high the interest rates are going to increase within those 6 months, that payment that we budgeted for is not going to change.
Let me ask you this. We've seen some of these products just hit the market, and of course everyone's trying to get creative to try to get the edge, but we've seen some lenders that are saying that we need to put a lot of money down up front to try to lock in that rate. How does that work with your programs?
It's not really necessary to do that. I know that we're staying budget as your shop for the home. I mean, there's furniture probably that needs to be thought of. There's so many expenses to be thought of. So, we broke it down into several different ways to do this, right? Because we don't want to make it seem also one size fits all either. So you have the opportunity to lock in the interest rate for 75 days. That's $250 up front. It gets refunded at closing. Or you can lock it up to 6 months. It's $500 up front and gets refunded at closing.
Oh, wow. So when you say refunded at closing, is that something that your company's doing to help them out?
Correct.
Okay, wow. Okay, so there you had it. We can lock before we go out there. So if we know we're looking for a 300 price range, we can lock in today and have that built into our idea of what we're looking for, which will save us a lot of time and headache in the end when, we go under contract, then next thing you know, we haven't locked, and then next thing you know, it's jumped up 0.2 points or something like that, knocking us out of our price range. Schervy's program kind of helps us gear and steer our way to it. I've heard a lot of other lenders out there saying that if we finance now because the interest is kind of high, we're all expecting it to kind of go down, probably next year, first quarter, maybe second quarter. Do y'all have any kind of programs that if we were to get our buyers in, engaged, and under contract and finance today, can we refinance at a later date? And what does that look like for the buyer?
Absolutely. There's different ways to do that. Even with our 6 months lock and shop program, when they get into contract, for whatever reason, if the rates drop, even if it's 0.5%, we allow them that float down opportunity to lower the interest rate and have the better of the two options. Hence, on the opposite side of the spectrum, if the rate increases higher than what we locked it for, they're safe. When they're under contract, whether they're building a home or if it's going to be an extended closing, we can lock the interest rate once under contract with an address up to 12 months. Now, certainly, if the opportunity comes and next year comes or 2 year comes, something changes in the economy, the rates are lower, we can always refinance and bring that lower rate. What we're doing at that point is that we are locking in the value of a home. As you know, the values of a home are increasing as well, right?
Absolutely. So these are some of the ways that we've helped our buyers kind of get to the next level against our competition. Like I said in the beginning, we're a fiduciary to our clients. We always want to try to find that next step to help our clients be the best and represented by the best. So you heard it here first from Schervy, myself. We're always here for you. My team is always on standby for our clients. If you have any questions or concerns, please feel free to reach out. Schervy, thank you for being here.
Thanks for letting me be here.
We appreciate you guys. We'll see y'all next time.